Hi Year 12, I'm going to go through with you how to complete exercise 10.44 on page 355 of the textbook. So in your exam, it's going to be similar to this question. You'll be asked to do a 10-column worksheet and then a classified income statement and classified balance sheet. So first of all, we'll start off with the 10-column worksheet. Now, the easiest way to do this is to put your accounts in order: revenue, expense, asset, liability, owner's equity. The trial balance in question 10.44 is not perfectly in order, so it doesn't list them all in the correct order. So we just need to do a bit of mucking around and listing those in order. In the exam, the approach I would take would be to run down the side of the trial balance and just put an R for any revenue, E for any expense, and then go into Excel and record those. But we'll go off, we'll start off anyway. So we've got sales, which was a credit of 166,523, and sales returns, which even though it has a debit, it is still up there with our revenue. So that was 62524. Okay, that was all of the revenue. So now we're on to expenses. So cost of goods sold were 38,271. And I'll just follow essentially the same order. Trade creditors is a liability, so that one we'll leave out. So I'll have postage expense, which was 2,250. Advertising expense, which is 16,540 by the looks of it. Next we'll have rent expense, which is 13,251. Cartage outwards. If you see this in the exam, cartage outwards is just another word for or name for delivery expenses. 1246. Telephone expenses, 684, and etc. etc. So you're just going to continue recording all of those ones. When you get down to your assets, you'll need to put any accumulated depreciation in there with the asset that it relates to, just straight underneath it. But I'll just finish doing these 879. Actually, I'll just pause it and put the last of the expenses in. Okay, so you can see I've popped the rest of those expenses in. Now, the first asset we've got is the manager's car. So this was a value of 41,550. And if you look further down, there's accumulated depreciation on this manager's car. So I'll pop that one in straight below it, because accumulated depreciation, although it's a credit nature, it's essentially a contra asset, and it just works to reduce the balance of that asset or the value of that asset. So I'd just like to keep them there together, because when you do your balance sheet, they will stay together. So next we'll have trade debtors, or accounts receivable as we usually call it. So you can put that in brackets just to remind yourself. Which will be 70,652. Now, similar to the accumulated depreciation, we're going to put in below the provision for doubtful debts. So that's essentially reduces the value of accounts receivable. So put in your provision for doubtful debts below accounts receivable. And that again will be a credit of 1,610. Then we had inventories, which is our last asset. So inventories were 15,660. Right, so now we're on to our liabilities. So we have trade creditors, or accounts payable. So this is 35,421. And of course you'll have your GST clearing, hundreds, your bank overdraft. So if we had just a bank figure, that would have been in assets, but a bank overdraft means our bank account's gone into negative, so it becomes a liability. The bank loan liability, 20,000. Oops, too far. Then we've got our capital and our drawings. So capital was 69,954 and drawings 246. So now you need to scroll down to the bottom and check that your total's equal. This usually indicates that you've done it accurately, so your debits equal your credits, which is what you want. If you have a figure in here, it means that these are out. So check that, we're all good in this case. So now we're on to the next column, which is the balance day adjustments. So if you have a look at the bottom of 10.44, it has additional information. This is where we draw our balance day adjustments for. So the first one, it says inventories on the 30th of June were valued at 14,660. So if we have a look at our current level of inventories, it says 15,660. That means that we have a shortage expense of $1,000. So we've got 15,000 should be 14,000. So we need to reduce inventory and expense what we call an inventory. Oops, if I can spell correctly. Inventory shortage expense. Now this being an expense account, it really should be up further, but we're just going to pop it down the bottom just for ease. So this will be a debit of 1,000. To make sure that our figures balance, we're going to credit the inventory control account also for 1,000. Okay, our next dot point says the vehicle expenses outstanding with $300. So outstanding expenses are what we called accrued expenses. So they are a liability because we still owe that money. So if we pop in our balance day adjustment for accrued expense, we're going to credit, because it's a liability, the accrued expense account, which means that we need to debit something. So we should have a vehicle expense account. There it is there. So that will be our debit for that balance day adjustment. So again, we're going to be all matching, debits equal credits. Advertising includes an amount of $1,200 that was for rental of a sign for 1 year. This amount was paid on the 1st of August. So the 1st of August 2009 means that's 11 months in this financial year and 1 month in the next financial year. So that means that that 1 month that relates to next financial year is a prepaid expense, which is an asset. So we'll have prepaid expense as a new account. And being an asset, we will debit that amount. So it's the 1,200 divided by 12 or multiplied by 11 over 12. No, that doesn't work, over 12. Which means that 1 month out of the 12 months that we paid for advertising relates to next year, so $100. And then that means that our advertising expense we would want to decrease, so we would want to credit $100 to bring that back so it's accurate. Our next one says we've got bank interest owing, $300 on the overdraft and $250 on the loan. So this is another accrued expense. We owe it, so it's a liability. So we need to add it in to our accrued expense value. So if you update that to a formula, say equal to the 300 we've already recorded, plus the 300 for interest on the the overdraft plus the $250 for the bank loan interest. So that should now show $850. What we then need to do is create a new interest expense account because we currently don't have one. We haven't recorded any interest. We will need to, which is going to be the debit side. We've already recorded the 300 for the other one. Oops. So that will need to be just the 300 for the overdraft and the 250 for the bank loan. Oops. Just be careful with your formulas. Now, if you have a look up here where my vehicle expenses, this we need to update to just say 300. I had a formula in there, so it changed when we did that. So once I've updated that, everything should match. Check down below, all good. Debits equal credits. Alright, the next balance day adjustment says we received notification that an accounts receivable owing $200 was declared bankrupt. Now this is the most difficult part. This is our provision for doubtful debts. So it's our bad debt, sorry. So we've got $200 that we'll never receive from our accounts receivable, which means we need to decrease the value of accounts receivable. So we'll credit 200, and that amount is a bad debt. So we'll need to increase our bad debt value by 200, so we'll debit 200. So the next step is to look at our provision for doubtful debts, which in the additional information says it should be $2,000. And currently we have 1610 in there. So we need to back that out and then update it based on our new figure that we should have. So what we need to do is debit our provision to bring that back to nil, 610, and then credit the bad debts for that figure. That's the first step. Now that that's done, we need to work out what figure our provision for doubtful debts actually has to be, which is 2,000. So we record that as a credit because it works to reduce accounts receivable, so it should be a credit. And then we need to create a new account called doubtful debts, where we debit that 2,000. Okay, so this one's a two-step process. You have to back out the old doubtful debts and put in the new figure. Okay, so we've got 1610 backing out and then putting in the new 2,000. Okay, so our next step is to calculate depreciation. So depreciation on the manager's car is $3,233. We've been lucky this time where we've been just told the depreciation expense. Sometimes, and in the exam, you may need to calculate it, so make sure you know how to do that. So depreciation expense, being an expense, will be a debit of 3,233, and that means we need to credit our accumulated depreciation for that final figure. So that brings us up to our adjusted trial balance. So we've now completed all of our adjusting journals, and all we have to do is transfer the information into the next column to update for all these changes. Okay, so that's going to go into the next video because I can only do 15-minute videos. So when we start off in part B, we'll be completing the adjusted trial balance, income statement balance sheet, and then hopefully our classified. Otherwise, I'll be in a third video.